Hey, welcome back. I want to dedicate this short episode just going through an example of what would Bitcoin on a balance sheet for a company would look like once the FASB accounting rules, the new fair value accounting rule change, which is expected to take place in January next year across all US publicly registered companies. And I expect a similar accounting rule to also affect other equivalent bodies across the world, because this is quite a significant change. So let's jump into it. So basically, this article, which I found is a useful resource, and you can refer to the URL at the very top. So it says, from a business perspective, the accounting and tax treatment of Bitcoin is still a relatively new and evolving subject. But as I said earlier on, this article attempts to provide a brief overview of Bitcoin's accounting treatment and guide, particularly designed for the CFOs and financial enthusiasts. And they're still trying to get their head around what would this mean to the company, looking into the prospect of adding Bitcoin into its corporate treasury reserve and on its balance sheet. So really, I just want to give a quick example because it's quite useful. So in terms of how Bitcoin will be accounted, particularly in the balance sheet, well, there is a very useful example shown here. Let's take the example that company ABC made a purchase of $1,000 equivalent of Bitcoin. Now, how would this be manifested in the balance sheet? So that $1,000 US purchase of Bitcoin would be manifested under the acquired intangible assets line item on the balance sheet. So the $1,000 purchase of Bitcoin would be shown and reflected on here on the balance sheet. So this is kind of new. This is what's significant about the FASB rules, because up until now, corporations, if they were decided to include Bitcoins in its reserve, they can only account for the cost and losses, but not for the appreciation or the increase in value of its holdings in its balance sheet. This is what's quite significant of this fair value accounting rule, which reverses that trend and indeed enables now for company to register its Bitcoin holdings in its balance sheet, both on the downside as well as the upside gains of its holdings. This is quite key, or difference if you like, in the FASB rules that's about to come out into effect, as I said earlier, on January next year. Also, just very quickly, if you refer to this URL guide, it does make several references on the comprehensive list of accounting resources that you can dive into a little bit more detail. Now it says, how has Bitcoin's accounting treatment changed? Prior to this fair value accounting rule, Bitcoin purchases were initially recorded at cost and subject to losses if the fair value falls below the value that's been previously recorded by a company, but not on the accretion. If there is a gain on value, they weren't at that point in a position to record that in its accounting books and on its balance sheet. And it says here, as a result of this change, companies are required to report all intangible assets on their balance sheet, including Bitcoin holdings, should be measured at fair value separately from other intangible assets. It confirms that Bitcoin holdings, both on the upside value and its fair value, both of those situations can now be reported under the intangible assets line item of your balance sheet. And of course, you've got some references, as I said, from various accounting bodies, whether it's the AICPA or the FASB. So I'm sure at some point this is going to be reflected on the rest of the accounting standards bodies around the world for the other publicly registered companies that are non-US denominated. So this is quite significant. And one other point that is going to be new, if a company decide at some point they want to relinquish some of their Bitcoin holdings in its balance sheet, well, the proceeds of the sale will be classed as cash flows from the operating activities, granted that the Bitcoin revenues were sold nearly immediately after receipt. This is, again, very, very positive news, because this is the whole point of acquiring or making acquisition costs for a denominated number of Bitcoin holdings on a corporate balance sheet, but also on the other side where they want to relinquish some of their holdings because they want to get the revenues of or the sales proceeds of that transaction. And that is going to be reflected on the cash flow portion of the balance sheet. And that said, I've already talked about the moment of selling the Bitcoins, that the company should indeed keep track of the cost when they made the purchase at different times versus the value, the sales value at the point of relinquishing those holdings from its balance sheet. And of course, you need to make some certain disclosures of the Bitcoin holdings from a statutory annual reporting perspective, right? This is going to be no different as how companies in the US are currently making those disclosures on the other types of assets. It's just given the fact that Bitcoin is going to be incorporated as another intangible asset type in the balance sheet, well, they need to make a similar type of disclosures of its holdings for that as well. Okay, so hopefully you found this short episode positive to provide that clarity for the first time in history to allow Bitcoin to be included in the corporate balance sheet. And this is an interim guidance. As I said before, we have to wait until the FASB rules have taken into effect in January next year, of which I expect more definitive guidance to be sent over to the various publicly registered US companies. So if you enjoyed today's episode, don't forget to please hit the like button, share the video to your other CFO or financial colleagues and other companies in the US, because this is going to be of interest to them as well. And subscribe to the channel, because I regularly post some interesting podcasts such as these, with everything to do with Bitcoin, blockchain technology, and indeed the future of finance. So until next time.